Hi traders, welcome back to another YouTube video. So in this YouTube video, I'm going to talk about why do most retail traders fail in the market. Right, so one of the biggest myth is there's about 85 to 95% of failure rate among the retail industry. This is based on the statistics. No one knows whether it is true or not. But from my experience, from the number of students that I've coached, I think this number is quite making sense, quite reasonable, because most students that I've coached before, either they quit halfway or they've blown up all of their money. Right, most of them like this. Only if let's say if I were to use 1 to 10, let's say 10 students for an example, out of 10 students, 2 of them will survive the market, 1 break even, 1 make money. This is how tough and how realistic this trading industry is. So when it comes to retail traders failing in the market, there's a lot of roots, there's a lot of causes that are making them fail. It's not just the big players are trying to target us as a retail trader. If you think about the logic behind this, behind people saying the market is actually manipulated to make sure retail traders lose money, this saying, I don't say is completely wrong, but if I were to correct the sentence or rephrase it, I will say the market is targeting liquidity and it's always being attracted to liquidity. It's never about retail traders stop hunting, etc. Because our retail money, as compared to the giant institutions, the hedge funds, the banks, the rich people, the extremely wealthy people, our money are relatively small. Assuming an average retail trader have about a couple thousand of dollars in their trading account, as compared to the banks who or the governments who have trillions of dollars at stake, which one do you think are more significant? It's probably them, right? And the institutions are competing against other institutions because they're always trying to get in the best price possible or sell at the highest price possible, if you get what I'm trying to say here. So that goes into our first point, which I think is one of the biggest mistakes that retail trader does. Is actually going to the chart, is actually chasing a trend. Again, first point, chasing a trend. Chasing a trend, a move, or what I being very reactive. All right. So this is actually the first point. So what do I mean chasing a trend? I'm not saying that it's wrong to trade a trend. You absolutely can make a lot of money trading a trend correctly. But a lot of people, most of the retail traders, they are being attracted to movement. They are not following a trend. They are just getting attracted by the sudden movement in the market, assuming right now a trader is looking at the price at here. All of a sudden, price spike up. That kind of move usually causes retail traders to instantly looking for taking action. They instantly want to get involved in the market, and they might have different thinkings like, here we have a break of trend line, or here we have a break of a flag pattern, we have a pattern here, so likely we are going to go up. That saying, that this kind of mindset will usually cause you to take unnecessary or low quality setups. Make sense? So that's one of the biggest mistakes. So for a quick solution, I want all of you to understand one thing. There are 3 different trending conditions. When it comes to trend, if someone tells you, I want to trade a trend, I want to become trend following trader, which kind of trend are you looking to get involved? Are you looking for parabolic trend? Are you looking for healthy trend? Are you looking for strong trend, etc.? And how do you know whether it is a strong trend, parabolic trend, or healthy trend? All right. So the first one, healthy trend. What is a healthy trend? It's basically trends that push, have a strong impulse, deep pullback. That pullback could be 50%, could be 61.8% retracement, could be 76 or 80%. Right? It's up to you. How do you define your own healthy trend? Have a decent impulse. Again, a good trend will never just form a nice wave up, wave down, wave up, wave up, wave down. That is not a trend. That is textbook, right? A healthy trend in reality, in the live market condition, will do things like this. There will be period where things stagnate before it runs higher. So what's most important is how do you set your stop loss and where do you enter, because the level that you enter a trend could very dramatically affect your risk reward ratio and whether are you going to stay within the trend or not. If you enter here having a stop loss below, likely you are going to survive this entire move, right? But assuming if you rushed into a trade, if you rushed into a movement, you get in here, where should you place your stops? Most retail traders are going to place their stops here, or maximum they're going to put it just under the low. The market was getting attracted into that liquidity pool zone, tap it before it runs. Are the market even trying to stop you out? Not really. It's purely just getting sucked into a level where there's a lot of liquidity, where there's a lot of demand. Makes sense? So that's the first point, healthy trend. Second one, a strong trend. What is a strong trend? Is basically a trending condition that push up continuously. All right, so I'll draw it, maybe I'll draw it a little bit better here. A trend that continuously pushing up with minor pullback, shallow pullback, tight consolidation, then further push towards the upside. Give you an example. How do you define a strong trend? Use the moving average, the easiest way. If you switch on the 20, the 50 and the 200 period moving average, you can see strong trend are trend that stays above the short-term and the mid-term moving average. Short-term moving average, it could be 8, it could be 18, it could be 20. Mid-term moving average, I usually use 50. Long-term, I use 200. Right? Remember, strong trend. The third one is parabolic trend. What is a parabolic trend? It is things like this. See that sharp sell-off followed by immediate recover? That exactly is where retail traders usually are going to make mistake. What kind of mistake are they going to make? They are going to jump onto the market without really assessing the market condition and saying that this is still a range. This is still a range. If you buy there, trust me, most of the time you're going to get caught off guard and price reverse all the way down. Because why? We are in a strong downtrend forming a consolidation. When price is in a downtrend, you should be selling. Do not get attracted into movement like this. Alright, so that summarizes our first point, which is chasing the trend or chasing a move or just being slightly too reactive. The second point, not following their trading plan. So this directly links to the first point. So why do I say that? Usually most traders come into the market with a plan. Let me be honest with you, most of the traders that I've coached, that I've encountered, they have a nice solid rigid plan before they start trading the market. Usually things go south when they start losing a trade. Then they lose the second trade, third, fourth, fifth. They absolutely just throw their trading plan out of the window. Alright, for example, maybe today your plan is actually to go short. You want to go short on example. I'm just using Bitcoin ticker as an example. You want to go short at 20,050 level. All right, assuming you want to go short here. Maybe price right now is at here. This is usually how people make mistake by saying, there's still a big gap here. Probably I can take a little bit of long position meanwhile waiting for the trade. Sounds familiar? When your plan is clearly to go short at somewhere a specific level, but because price is far away from your entry, you're looking for bottom trading. What is bottom trading? Bottom trading. You got nothing to do, that's why you're looking for some action. looking to take action just because there's nothing much happening in the market, you want to get involved immediately, because trading is a very boring business. In order to make yourself entertained, you need to constantly get involved in the market, and that's the biggest problem of retail trader. They have a plan of going short there. Then what happened next is, oh, price starts running up. Then you say that, hey, that's a strong push, maybe I'll take a long here. Maybe you bought the pattern formation, you have a stop loss here. Instead of shorting the market, right now you are doing exactly the opposite of what you should have done. You wanted to go short, that's within your trading plan. Right now you took a long. When you are in a trade and things are moving into your favor nicely, it usually creates greed within our human brain, as in we no longer think in terms of the SNR level, we no longer think in terms of reality. We now think in terms of the money, the monetary perspective. How can I make from this trade? Instead of looking at things and being objective and say, maybe I should take my profit here, because there is a huge supply area, there's a huge resistance over there. You start extending a target when it thinks, then of course, obviously, when you don't follow your plan, it usually doesn't end up well. You get stopped out on this, and when you're doing your reflection, you say, my plan was actually to go short. Why the hell did I go long? One reason: bottom trading. You are getting attracted into the first point. You're getting attracted into a move. Hence, you are not following your trading plan, because you were getting sucked into that kind of move. All right. So remember, when you have a trading plan, remind yourself what is the purpose of a trading plan. Is make sure you follow your plan and your rules. If you don't follow your plan, what's the purpose of creating one? You might as well just go to the casino and start gambling, right? Again, always follow your trading plan. The third point, which is the most common one, which is taking excessive, pardon, I forgot how to spell it, excessive risk. This is one of the very important point, which is taking excessive risk. Most traders, they have a fixed amount in their mind that they can risk per day, per month, per week. Example, maybe you say, I can only risk $1,000 a month. That's my maximum risk daily drawdown limit. But when they start losing more and more trade, their behavior starts shifting, because that is what we call emotions. That is psychology. It's biological. It's not something that you can avoid. Emotions is biological. When it kicks in, it's hard to control yourself, to remain calm, to settle down, and to think logically. It's tough. That's why most retail traders, they blow up account, and most professional traders, they have blown up their accounts multiple times. Like myself, I call myself a professional retail trader. I've blown up easily 5 to 6 accounts, and it doesn't really bother me. Why? Because that was the early learning stage of my trading journey. Right? That is just part of the learning journey. Right? But if you're constantly taking excessive risk, which means you're taking trade that you're not supposed to take, you're over trading, you're revenge trading, it could really cause you to not have the ability to achieve consistency. Because if you're constantly taking excessive risk, maybe this trade, it looks good, then you take 5% of risk per trade. That trade doesn't look so good, you take half a percent of your account. So if you're constantly shifting on your risk, you are constantly playing around with your risk, or in the worst case scenario, if you're not respecting a risk, how can you expect to be rewarded nicely in the market, right? Because risk, how much do you risk per day, is also, it should be stipulated on your trading plan, which goes to the second point. You need to follow your trading plan. If let's say you lost 3 trades per day, today you lost 3 trades, and your trading plan tells you clearly if you lose more than 3 trades, probably is 3%, assuming 1% per trade, you cannot trade anymore. It's sort of like a circuit breaker. You need to stop trading. If you follow it, nice. Maybe the fourth setup really appear and you didn't take the trade, it ends up being a huge winner. It doesn't really matter. What's more important is to actually follow your plan. Making sense? If you don't follow your plan, regardless of how well you perform today, this week, this month, you will ultimately blow up your account. You will never achieve whatever trading goals you have, because if you want to become a good trader are usually extremely good risk manager. They look at their risk very objectively and they think in terms of risk reward. If I want to make $10,000 a month, how much should I put on the table at risk to make sure I can make $10,000? We always think in terms of risk. Don't think in terms of reward, because when you start imagining, when you start picturing all those unlimited profits you can make, that creates a lot of illusion within your own virtual market. Make sense? That's why from now on, 3 main rules you need to follow if you're someone who's struggling to make consistent profit. The first one, do not be extremely reactive, or do not chase a move. If the move is within your trading plan, feel free to chase it. But if it's not, don't take it. Second point, do not take, never violate your trading plan. Right. Second point again, never violate your trading plan. Your trading plan is like a Bible. It's like a trading Bible. You need to follow it unless things have really changed that you feel like you need to slightly tweak your trading plan, your rules a little bit. That is beyond acceptable. But if everything's going just normally, just follow your trading plan. Take it as your Bible. Third point, do not take excessive risk. You do not need to risk $10,000 a day to make $100,000. In fact, you don't need that much money as well. Make sense? Again, for these 3 rules, I believe most of us will be able to achieve consistency within a shorter period of time. Alright? Be disciplined, be patient, and be consistent. Now, that's it for today's YouTube video. If you like the video, please don't forget to like, share, and subscribe. Share it with someone else, any fellow traders who would love to watch this. And if you have any questions, let me know in the comment section below. Trade safe, take care, and I'll see you in the next video. Bye bye.